All right, it's time to get into the news of the day. Let's have some fun. So the stories I'm going to talk about is Biden's tax increase, trucker shortage driving inflation, BlackRock versus big oil, Iranian pipeline keeps oil out of water. Number 5, Iranian uranium. And number 6, does China need more sex? And number 7, Biden's big U.S. military budget. Remember, if you've got any questions, to put them in the chat. But before we get started, it's June 1st. Let's take a look at the month of May. What you can see here is a few things. I decided to look at the world markets and developed and emerging markets, and we can see that the world markets were up about 0.5% for the month of May. Year-to-date, markets are up 10%, and globally, markets are up about 36% or so over the past 12 months. Now, the main driver has been the developed markets, which are up 0.7%, versus emerging markets, which are down 1.1%. And big thing is, of course, Europe. And what you can see in this table is that Europe, developed markets, were the big outperformer. And that kind of makes sense after the U.S. has been such a strong performer for a while. And also, what's an interesting one that I put in under the developed markets is developed non-U.S. So what you can see is over the last 12 months, developed non-U.S. was up about 24.9%, while the U.S. was up 40%. It just shows you that the U.S. has been totally driving the developed markets. Now, within the emerging markets, they've been down about 1.1%. And that's mainly driven by what's weakness that's happening in Asia. So let's take a look at the largest market cap companies or countries in the world. I just decided to list them out from largest to smallest here. And we can see again, the world was up by about 0.5 percentage point in the month of May. But the big winners were both India and China, that were both up about 4%. Now, you may ask, why was emerging markets not up so much? Well, first of all, because China here, I'm looking at the China A-shares market, and the China A-shares market is a small part of the overall emerging market index. And that's part of the reason why it doesn't show up so strong in the emerging markets. And also, India is a very small part, although it is a significant part of the emerging economies in the emerging markets. It's not a huge amount. And finally, what we can see here is Taiwan and Korea both were hit. Remember, Taiwan was hit by the minor COVID outbreak that put everybody into a panic. Let's continue on and look at currencies. So what we can see is the dollar index was down about 0.6%. For the last 12 months, the US dollar is down about 8.6% relative to all other currencies in the world. And you can see also over the last 12 months that the euro has been strengthening relative to the dollar. Basically, these are the two major currencies. You can also see the Chinese yuan up 10.9%. So really the story is, for the year, dollar down, other currencies up. But for the month, we can see strength both in China again and India. And the weakness was in Korea, and Malaysia got hit pretty hard in this particular month of May. My thesis on the US dollar is still that we are going to see continued weakness in the US dollar relative to other currencies around the world. And though the US market could be propped up, let's just say that the US market could continue to be pushed up by low interest rates and the recovery. The problem is that government debt and debt in general in the US, I believe, will have a negative impact on the US currency. So for a longer term perspective, I see a weak US dollar. All right, let's go into the last part of that. Let's look at sectors and what's happening here. First of all, what we can see is that it's been all financials, banks, diversified financials, all the finance-related sectors have been roaring as we see a recovery in the economy. And really it comes down to also people believing that these particular institutions are not going to go bust as a result of this crisis. The worst performer was infotech and consumer discretionary. Now, actually, it's very interesting to see that infotech is only up about 5.9% year to date. That's versus 10% for the overall world. So as an industry, you can see that infotech is taking a hit. If you go back 3 years, the infotech sector is up about 89%, beating all other sectors. But this shows one of the themes that I think we have to watch for, and that is continued weakness in the infotech. Why? Because a tiny number of infotech companies are making massive profits. The last time I looked at it, was something like 16% of all profits in the US market, including like 3,000 companies that I looked at in that particular study that I did. 6 companies, the 6 infotech companies, generated about 16% of all that profit. And what we can see here is that when profits get so high by companies, in this case infotech, eventually what you do is reach a peak. And when you do, it's hard to see that you're going to get share price performance. I think an important thing to remember when you're investing in the markets is you're really looking for earnings growth in a company. And a company can increase earnings growth in 2 ways. Number one, they can increase revenue. And if they can keep costs, the ratio of cost to revenue the same, then that's going to feed directly down to the bottom line. The second way is imagine that they kept revenue the same, but they reduced costs. If they did that, then the change in their margin was improving. Their profit margin was rising because they were reducing costs, and that would drive EPS. Either one of these 2 things can drive EPS of a company. But what I would say here with tech companies is that the driving of EPS driven by the change or the improvement in the profit margin is done. These guys can't go any further. And as a result, it really has to do with the revenue that they're going to generate. And already, I think that is going to be the weakness. So I would be very careful. The last time I gave some recommendations on tech, basically my recommendation was don't overweight. And maybe at this point, we should say, maybe consider reducing that weight further. All right, let's look at the first story of the day. Biden budget said to assume capital gains tax increase started late in April. Well, we've already heard about Biden's plan to increase taxes. In fact, most people who saw the Trump, you have to give it to Trump in this case. First thing he did is he reduced taxes pretty massively. That gave the economy a kick. That gave him a kick. But it's set up because the U.S. really, they have to raise taxes. Everybody who had any sense knew that the Trump tax cuts were only temporary, given the amount of debts that the U.S. government is running up. Now, of course, the modern monetary theorists may say, never mind, just keep issuing debt. Don't worry about it because it's not going to hit the currency because we are the reserve currency of the world and nobody's going to basically knock us out of that position for a while. But I would argue that basically what you start to see is that the government just can't sustain the amount of spending it has without taxing further. So that's the other genius of what Trump did is he left the Democrats having to increase taxes, which is what they're doing. But what makes it even worse, and this will make it difficult for midterms for Democrats, but what makes it even worse is he's basically saying that it could be retroactively applied basically back to April. And that's the key here is if it's retroactively applied, then people would already be having to pay once that comes into law. Now, it hasn't come into law yet, but I expect that it will. All right, New York Post tells a story about how the trucker shortage is fueling the meat crisis. Now, this really is a good story of inflation on the ground. The cost of boneless ribeye steak has increased 26.9% from last week. Nebraska Land, a meat distributor in the Bronx, said it's due to driver shortages. Brazil, the 3rd largest corn producer, was hit by its worst drought in 5 years. That reduced yields, and that rising demand in China also contributes to corn prices reaching highest levels in the past 8 years. So as far as agricultural products, corn is such a major input that if corn prices are rising, it is impacting everything, including, in this case, beef. Now, also, you see a combination of rising corn prices and you see the tightness in the labor market affecting the truckers, right? Unemployment benefits include $300 weekly checks from the government, could deter people from rejoining the workforce. These benefits are nearing an end in many states, but we could see that they'll start to come back into the workforce. Now, let's look at BlackRock goes against BP board in climate resolution vote. This comes from Reuters. This is an interesting story. The organization Follow This received 20% support from shareholders such as BlackRock to pressure BP, British Petroleum, to cut emissions by 2040. meaning cut them down by the time they reach 2040. While the resolution was rejected, it is a sign that investors want change in the industry's practices. BlackRock has successfully influenced other oil and gas conglomerates such as Total and Royal Dutch Shell to transition to clean energy. Now, pressure from shareholders could push management to conduct M&A for maybe renewables and the like. Deloitte has forecasted that by 2050, more than 27 billion gigawatts of energy consumption could be sourced from renewables. Investors could buy, look for renewable companies that are fast growth. Now, I just want to comment about this because I think it's fascinating. BlackRock came out, the chairman of BlackRock came out with a document along with some others, basically talking about stakeholder capitalism and talking about looking after not just the shareholder return, but also stakeholder return. Now, for me, I call this a little bit of bullshit. Why is that? It's because if any company started rewarding stakeholders around the world, right? And they started rewarding their suppliers, their customers, their employees, the environment, and the community, and they started rewarding these stakeholders, what would happen to shareholder return? It would crash. And everybody would ask. In fact, a big company that I was talking to a friend of mine that they talked about stakeholder, improving stakeholder returns. I said, well, then if you're a supplier to that company, you should go to them right now and ask for a higher price. You've been beating us up all these years and not caring about stakeholders. What about my company? What about my employees? So stakeholders is a very broad topic. And I believe once you open that door, it is a high risk situation. Now, the other thing is that, now you may say, well, Andrew, you're heartless. You're saying the company should just take care of shareholders and nothing else. What about the environment? Okay, there's 2 points to this. Point number one, we have a government. A government has regulations, and it is the job of the citizenry to push that regulation to the representatives of the government, and then the government to announce that regulation. These big oil companies have to follow those regulations. If they don't, they're going to be fined or in trouble. And if they're not, those regulations aren't being enforced. It's not a problem with the company, it's a problem with the government. So number one, if government says you can't pollute up to a certain level or something, then they have to follow that. So that's the first thing. And the second thing is that I want to think about the idea of returns. Now, if renewables were cheap, everybody would go in and produce renewables, but they're not. They're expensive. We're having to push these companies into renewables because it's so expensive. Even solar power generation has come down a lot because of volume and advances in solar panels. But the fact is, it's still not a cheap source of energy. Wind and others, there's a lot of cost, particularly cost to storage and transport and all of that. So the point is that as these companies like BP are forced to move into these renewables, of course, their returns, their profits are going to fall. They must. These are lower returning projects. So my question is this. When the shareholding returns of BP start collapsing because they're investing in low yielding renewable projects, right? What is BlackRock going to do? Are they going to hold on to the shares as they fall and the returns fall because they're allocating their money to renewables as being instructed by BlackRock? Or is BlackRock going to say, well, wait a minute, we also have an obligation to our investors who put money with us to make sure we don't lose that money? This is the challenge. And really, it comes down to everything the government can do to incentivize and lower the cost of renewables is great. But to push companies into renewables when the returns are not there, I question the benefit of that. Anyways, that's a little bit of talk there on that. Now, Iran transfers oil from pipelines skirting troubled strait. Let's look at this story. Iran started its first transfer of crude oil via its strategic Gorajask pipeline. It's a 1,100-kilometer pipeline, and it runs along the Sea of Oman and allows for free movement of oil to the rest of the world. This allows Iran to shift its oil exports from the Strait of Hormuz towards the pipeline, basically getting it out of water transportation. It is now able to transport over land. And part of the reason why they're doing it is because the U.S. sanctioned Strait of Hormuz currently makes up approximately 83% of Iran's total oil exports. So let's make a map. I made a little map here with Google Maps, and I drew a red line where this pipeline's going from. And you can see from this part of Iran all the way down along the Gulf of Oman and the Persian Gulf, and then eventually it's going to get to this point. The point is that they're using this the whole area that they're trying to transport to try to avoid the Gulf of Oman and the Persian Gulf so that they could then release the product into the bigger ocean. So what we can see from this is this pipeline is estimated to transport about 350,000 barrels of crude oil per day. It's also going to allow for regular shipping of various oil adjunct and petrochemical products, which are in high demand in Asia. Many countries in Asia are willing to buy that oil. All right, Iran fails to explain uranium traces found in several sites. Let's take a look at this. UN nuclear watchdog IAEA revealed that Iran has failed to explain origins of uranium traces at several undeclared sites. Of course, uranium is used in the production of energy as well as nuclear weapons. So they estimated that Iran currently has about 3,241 kilograms of enriched uranium, 10 times more than the 2015 nuclear deal limit. And Biden has expressed interest for Iran to rejoin the nuclear deal if it fully complies. Remember that Trump had previously pulled out of that nuclear deal. If Iran fails to justify its uranium stock, this could derail talks on a nuclear deal between the U.S. and Iran. Next story, the China three-child policy aims to rejuvenate population. Now, this is my question. Does China need more sex? Well, just kidding. But the point is, let's take a look at the story. The current census shows that Chinese working population age 15 to 59 is down to 63% of the population in 2020 from 70% in 2010. What do we mean by that population group? That is the labor force of an economy. And the way that you generate growth in economy is if you have a growing labor force, it means you're bringing more people into the labor force, and therefore you're creating more output, and ultimately you're creating more consumers. If the labor force is shrinking, now you've got a problem. And that's Thailand as an example. The labor force of Thailand has been shrinking for many years because population growth has basically been flat. And the result of that is that eventually it leads to trouble. And so China is facing that right now. The new plan aims to reverse the population structure and increase government support to reduce families' education expenditures. Japan, Taiwan, Hong Kong, South Korea, and Singapore have tried to reverse birth rates, but have largely failed. If these efforts fail, China could experience a slow labor force growth, hindering overall economic growth. And of course, increased population age could also increase China's demand for healthcare services. But don't go too far on this. Why is that? Because the point is that there's two ways that you increase the output of an economy. First is that you add more inputs, meaning more labor. And that is just a structural thing of adding as much labor as you can. And that's the way China increased its economy over the last, 20, 30 years. But there's another way, and that is, of course, increasing productivity where, okay, let's imagine the same number of workers are working this year, but they're more productive because of innovation and because of technology and because of better management systems. You can see that they can still grow the economy. So that is the story there. And I think the last story is eyeing China. Biden defense budget boosts research and cuts procurement. And went the wrong way. There it is. The $715 billion national defense budget will be used to modernize the U.S. nuclear arsenal and develop warfare capabilities. The budget aims to enhance U.S. capabilities to counter threats against Russia and China, and will also emphasize on hypersonic missiles, artificial intelligence, and 5G. The tension between U.S., China, and Russia has been escalating. And of course, Russia and China are being bullied by the U.S. in the dollar system, and they're trying to figure out a way to have less reliance on dollars. And this could lead to eventually a standoff. Now, I'd like to close out this section by just talking about this for a minute. The U.S. government can come up with billions of dollars. I believe the defense budget was increased by $10 billion under Biden. but they can't come up with money to deal with all the other problems that are going on in America. It's really a sad situation where America can raise money to kill and fight people all around the world. And they can come up with all kinds of narratives about how evil everybody is and to try to attack, and they can't even take care of their own people. My main point that I would say is that I left America 30 years ago. And what did America do? If they had just, instead of going in and spending $3-4 trillion in wars in Iraq, wars in Afghanistan, covert wars, all this trillions of dollars, and they had just invested it in their education system and in their infrastructure, America would be amazing. And unfortunately, they didn't do that. So let's see if we have any questions here. If you've got any questions, okay. Robbie says, do you believe that strength from the euro could come from countries moving off the dollar? And do you think it is sustained? Probably not. My feeling is that that shift into the euro is simply dollar weakness. People are not buying dollars. They're not converting their currencies into dollars to buy US treasuries because the yields are pretty low and the risks are getting higher. So I just think that they're looking for an alternative, and the euro is the next largest currency. And, you know, if somebody says, I'm going to take if somebody was to tell us that their strategy is they think in the world, people are going to sell US dollars and buy Malaysian ringgit, as an example. There's no way Malaysia could absorb that kind of buying. So Malaysian ringgit is a tiny, tiny currency compared to the US dollar. So really, you got to look at, it's going to be US dollar, euro, and Japanese yen, and Chinese yuan. And those really are the main ones. So let's look at the next question. Dong says, do you think commodity prices will go higher? Good question. Well, I've had 25% in my all-weather strategy now in commodities almost since the beginning of the year, and I'm looking at it right now. I haven't made the final conclusion, so I'll know more. But, you know, I would say all the factors seem to be in place. But I would say, Dong, that one of the things that's changed in my mind is that I do see the risk. I do see, you know, Fed chairman said that the inflation is transitory. I do see the risk that inflation just shoots up right now. Everything is, you know, expensive and all that, but that we come out of this initial recovery period and then demand slows back down. Jobs are slow to get. Income, people are not going to spend that much. And I think there is an argument you could make that this will be followed by deflation. I haven't fully constructed that argument, but up until now, what I've said is I expect a pretty big rise in inflation. And particularly, I talked about war and the risk to inflation's there. So that's still my stance. But I recently have been thinking a lot more about what could potentially happen to this thesis. And I think, Dong, that's a good lesson for you and all of my other valuation masterclass students is, you know, always you've got to question your theories. You've got to question your ideas, or else you get stuck in them. In fact, I will say, before I go on to the next, together with one of my interns, Michael, let's give a big hand for Michael Sanchez, who's just been doing research with me here. He and I are he's helping me to basically pull out some of the lessons that we learned from my Worst Investment Ever podcast. And one of them is exactly that. If you get too convinced that what you think is right, eventually it will become wrong. So question what you know. All right, next thing. Tanya Watt says, Thailand inches itself to aging society without population increase. How likely for Thailand to copycat China and increase policy with the incentives for free education? Tanya Watt, I think that the challenge here is that Thailand doesn't have any great policy that I can see that's going to reverse the aging society. The big difference for Thailand, if you look at Japan as an example, Japan got rich and then they got old. China is in the process of getting rich and then getting old. But Thailand never really got rich, but they're getting old. And this is a huge burden that I know, whether it's the SET, the Stock Exchange of Thailand, the Securities and Exchange Commission of Thailand has been looking at it. All different organizations in Thailand can see that there's a big issue. So the answer to your question, Tanya Watt, is that no, I do not think that Thailand is going to be able to solve its population problem anytime soon. I don't see anything that's going to happen. Now, you can also argue that China may not be able to do it either, right? Because just making a policy that you can have 3 kids, well, if the cost of kids are so high and people are used to not having that many kids, then you're not going to get them. So it's a complex topic. All right, next. Pawn says, what are your thoughts on Biden's $6 trillion infrastructure budget plan? I think it's a massive, massive amount of money to spend, and I'm just terrified that the U.S. just keeps spending. Remember, every single dollar that is spent by the U.S. government has to be taken from its citizenry, whether that's from the individuals or from the company, but ultimately it's coming from society. Now, imagine you take $6 trillion out of businesses and out of individuals' personal accounts, and you do that through taxes, and then you allocate that through our geniuses at the government. How well are they going to allocate that? We know that if it would be allocated well under the private sector, it's going to be allocated less well under the government. So I would say there's a risk. Number one, he's probably not going to get approval for all that budget. Number two is that we're going to get some leakage in that it just doesn't really hit where it's supposed to hit. And number three, the actual projects that they're doing, I question whether they will be as relevant as it appears. But let's see. Manling says, what is significant of reviving holding off the Iran nuclear deal? It's going to be interesting. I mean, normally, so far, the atomic agency, the International Atomic Energy Agency, I believe it's called, is the one that's going out and inspecting. And they've been known to be somewhat impartial. But we also have recently seen the OPCW, the Organization Against Chemical Weapons. That organization has been infiltrated by the U.S. government and basically has taken what was pretty clear evidence by the employees of the organization that there was no Syrian gas attack. And the U.S. government officials came in and basically pressured them to change the outcome of that particular report that they did on the ground investigating. So I think that, we have to also question some of these organizations. Remember that the people behind Biden, in my opinion, are so hungry and eager for war, whether it's with Russia, whether it's with China, or whether it's with Iran. And this is part of what I expect we're going to see in the next couple of years. All right. I think this is the last question. Any last questions? Just put them in there. Oop, no, I see another one coming in. Okay, Dong says, what will happen if the euro becomes the main currency instead of the US dollar? The problem is that the Eurozone is not a very vibrant zone. It's just not an impressive area. And that's part of what makes China kind of more attractive, that there's going to be more demand for Chinese yuan than there is for euro. So I think it's unlikely that the euro is going to become a main currency relative to the US dollar. Also remember that there's still challenges to the European Union and the ability to hold it together. And that's where China and the Chinese yuan has, I think, some more advantages compared to the euro. But for Chinese yuan to become an international currency, it's got to be freely exchanged. And it's not that way right now. And so there are some issues there that have to be considered. Okay, what are some examples of ways to combat an aging population if having more kids is not successful? There's not a lot of solutions here. We can see it happening in Japan right now, where the population has been shrinking and aging, and they've had to automate things. They've had to come up with little robots to do things for older people. It's tough. The one way that countries can deal with this that has worked in the past is open up the borders. Well, not completely open up, but take an example like the Philippines. You have a lot of young people, a very young society, almost 100 million population versus Thailand of about 70 million. So there's a huge volume and good English skills and also well-educated nurses, doctors, and others there. So why not open up the society at Thailand to have more foreign labor? It is such a controversial thing from a country's perspective, but that's one of the ways. And that's part of what made America great over the years, is that they brought in foreigners, and people come and they immigrate there, and then they do that. They bring the youth and the new technologies and ideas. All right. Sundar says, how is CPL doing with all that debt? Well, the thing about CPL that you could argue is that, number one, they've got, 8,000 stores now across Thailand that are just ticking away through the whole crisis, never really shutting down, never really facing a huge problem compared to all of the mom and pop places that are busted and out of business. So that's one. They seem to have had a pretty tough advantage during this time. Number two, the way that CPL treats its suppliers is very, very long and extended credit terms. And so from a working capital perspective, when they grow, they generate money, unlike almost every other company out there. Almost every company, when it grows, it is consuming money because it needs inventory and it has to give accounts receivable or credit to their customers, but not CPL. They're basically getting somewhere between 60 and 90 days from their suppliers, and they're immediately selling. They're very tight on their inventory management, so inventory is relatively low. And the second thing is, of course, they're only collecting cash, so there are no accounts receivable. So if, in my perspective, I probably wouldn't bet against CPL and the risk of them not being able to pay their debt. I would say they have a lot of tools in their handbag to fix that. All right, next question. Dr. Ali and CFA, nice to see you. Another CFA. Thank you for insightful session. You are welcome, and thank you also. Have a great day. Let's see. We got another question from Earl Macabulos. I don't know if I pronounced that right, but that's how I would pronounce it. Do you have a view about the Philippines' ability to hit economic recovery, given its lack of coherent vaccination problem? You know, the problem, and I highlighted this in my email on My Worst Investment Ever. And Earl, if you're not signed up for the email, make sure to go to myworstinvestmentever.com and sign up. Just go to the site. You'll see where you can sign up to receive my weekly emails. But I did a weekly email that looked at the GDP of all the countries around Asia. And the Philippines has been hit so bad. It's got problem number one, not a lot of exports. And therefore, you just see really a net reliance on imports. And that is tough. Number two, there's been not a lot of investment, whether it's from the government or from the companies. So you're totally reliant on consumption. The Philippines economy in the first quarter, in 2020, I believe, was down by about 9%. Remember that in the 1997 crisis, the Thai economy was down by 11%. So Philippines has been hit harder than any other country. Look at Taiwan or Korea as an example. They didn't even go negative with the coronavirus, and even China also is the case. But Philippines has been wiped out. So I don't think it's just the vaccination issue. I mean, obviously that's one issue. I think there's a lot of other factors. There's another factor that happened in the Philippines that didn't happen in Thailand, and that is in the Philippines, basically, when the coronavirus started hitting, COVID started hitting, Thailand's government allowed its people to go to the countryside, to go to their homes. Any migrant workers that were in major cities basically returned to their homes. Now, everybody was terrified because they thought, oh my God, they're going to spread COVID all over the countryside. But what we found was that they didn't do that. They didn't have COVID, and it wasn't a problem once they got to the countryside. Whereas the Philippines had a different strategy, and that was to lock things down and not let people, let's say, return homes. Plus, you have massive ghettos, or let's say ghettos, but shanty towns and, you know, very compact places in the Philippines where people are living. Thailand has a lot less of that, let's say, in Bangkok. And so the result of that is it's just harder when you lock everybody down and in one place. It turns out that that ends up possibly causing the COVID to be worse. Last thing about the Philippines, and Earl, I hope that you are taking care of your health, because one of the things that I can see in the Philippines compared, and I did this study that I published on my blog, becomeabetterinvestor.net, where I compared the Philippines with all other countries, and I looked at all countries, and what I saw was that the level of obesity is a bit higher in the Philippines, and that's a real danger signal for COVID. And also heart disease, diabetes, and a couple of other things were pretty high in the Philippines. So I really think that there's a lot of different factors that are impacting the Philippines. However, to get back to what you talked about, economic recovery. Also, because it's been hit so hard, we should start to see at some point a pretty strong recovery. So we've seen a slow recovery in line with all the other countries, but I expect that we will see at some point Philippines coming back. Wow, a lot of great questions, a lot of great topics. I want to thank all of you for today. And if you got any questions, make sure to leave them in the chat. Have a great day, and I'll see you.